There's a number accountants don't talk about. Not a tax code, not a balance sheet figure, not even a depreciation rate. It's this: 95%. That's the percentage of accounting tasks that involve pattern recognition, data entry, reconciliation, and rule-based decision-making. The exact things artificial intelligence was born to do. And here's the uncomfortable truth. If 95% of your job follows a repeatable pattern, you're not just replaceable, you're already being replaced. Right now, as you listen to this, AI systems are closing books in seconds. They're auditing transactions faster than you can open Excel. They're filing taxes, detecting fraud, forecasting cash flow, and generating financial reports, all without coffee breaks, overtime pay, or questioning the meaning of life at 2 a.m. during tax season. But here's what makes this different from every other robots are coming scare story you've heard. It's not coming, it's here. In 2023, Deloitte deployed an AI system that reduced audit time by 40%. PwC launched a platform that automates tax compliance across 150 countries. QuickBooks Zero and FreshBooks now have AI assistants that categorize expenses, reconcile accounts, and generate reports autonomously. And then there's this. A survey by the American Institute of CPAs found that 67% of accounting firms are already using AI tools, not testing, not considering, using. The profession that built itself on precision, trust, and irreplaceability is now facing the most precise, trustworthy, and tireless competitor ever created. Itself, but automated. Let me paint you a picture. Imagine you're a mid-level accountant at a regional firm. You've spent 15 years mastering generally accepted accounting principles. You know every loophole, every deduction, every way to save your clients' money legally. You've built relationships. You've earned trust. Then one morning, your boss introduces a new software system. It's friendly, it's fast, it's eerily accurate. Within 3 months, it's doing 70% of what you do, but in 10% of the time. Within 6 months, 2 of your colleagues are let go. Within a year, you're no longer an accountant. You're a financial data analyst, a glorified babysitter for an algorithm that doesn't need you, but policy says someone has to supervise. You've become the human disclaimer. And here's the scariest part. You saw it coming, but you didn't know what to do about it, because nobody told you the rules had changed. See, accounting was once considered recession-proof, a safe bet, the kind of job your parents wanted you to have. Stable, respected, necessary. But necessity doesn't mean irreplaceable. It just means someone will find a cheaper, faster way to meet that need. And AI just became that someone. Now, before you close this video and spiral into existential dread, let me be clear. This is not a eulogy. This is a warning, but also a roadmap. Because while AI can do the math, it can't do the meaning. While it can process numbers, it can't interpret context. While it can execute tasks, it can't understand people. And that gap, that beautiful, messy, irreplaceable gap, is where your future lives. But only if you act now, only if you stop treating AI like a threat and start treating it like a tool. Only if you stop defending the old version of your job and start building the new one. Because here's the brutal reality. The accountants who survive won't be the ones who know the most about accounting. They'll be the ones who know the most about change. They'll be the ones who audited their own relevance before the algorithm did. They'll be the ones who saw the pattern and broke it. So let me ask you, when was the last time you did something in your job that a machine couldn't? When was the last time you provided insight instead of information? When was the last time you made a client feel understood, not just invoiced? If you can't answer those questions, you're already obsolete. You just don't know it yet. But if you can answer them, If you can point to moments where your humanity mattered more than your efficiency, then you're not doomed. You're just at the beginning of the most important transformation of your career. Because AI isn't ending accounting, it's ending bad accounting. And if you're willing to evolve, you won't just survive this shift, you'll dominate it. Welcome to Part 1. What makes this job safe or doomed? Let me tell you about a company you've probably never heard of. It's called Blackline, and in 2023 it processed over 3 billion financial transactions using AI without a single human accountant touching the data. 3 billion. That's not a pilot program, that's not a test. That's the new infrastructure of global finance. And it's growing exponentially while traditional accounting firms are shrinking their headcount year after year. But Blackline isn't alone. BotKeeper automated bookkeeping for over 2,000 accounting firms, eliminating the need for junior accountants entirely. Vic.ai uses computer vision to read invoices faster than any human ever could. TrueWind offers AI-powered bookkeeping that costs $300 a month, the price of 2 hours with a traditional CPA. And then there's ChatGPT and its enterprise cousins, which can now pass the CPA exam, draft financial statements, explain complex tax regulations, and do it all in multiple languages simultaneously. The decline isn't theoretical anymore. It's statistical. According to a 2024 report by the World Economic Forum, accounting and auditing roles are projected to decline by 26% by 2030. That's not attrition, that's elimination. McKinsey estimates that 80% of accounting tasks can be automated with existing technology, not future technology, not experimental technology, but the tools available right now. The Bureau of Labor Statistics, usually conservative in its projections, downgraded the growth outlook for accountants and auditors from positive to negative for the first time in modern history. Let that sink in. The same government agency that told your parents accounting was a stable career is now telling your children to consider something else. But here's what the statistics don't capture: the pattern of decline. Because AI isn't replacing accountants randomly, it's following a predictable sequence, like a chess algorithm that knows 20 moves ahead. First, it came for the data entry clerks, the people who typed numbers from receipts into spreadsheets. They didn't see themselves as accountants. They saw themselves as processors. And one day, optical character recognition became good enough, and they were gone. Nobody mourned. Nobody protested. It was just progress. Then it came for bookkeepers. Small business owners realized they didn't need someone on payroll when QuickBooks could sync with their bank, categorize expenses automatically, and generate reports on demand. The bookkeeper became an annual consultant, then a quarterly one, then a ghost. Now it's coming for the accountants themselves, not the partners, not yet, but the mid-level professionals who do the actual work, preparing statements, reconciling accounts, filing taxes, conducting audits. The ones who thought, well, at least my job requires judgment. Except AI now has judgment too. Let me give you an example that should terrify you or wake you up, depending on how you look at it. EY, one of the big 4 accounting firms, developed an AI tool called EY Canvas that can analyze financial statements and detect anomalies with 94% accuracy. That's higher than the average human auditor. And it doesn't get tired. It doesn't miss details because it worked late the night before. It doesn't have unconscious bias. It doesn't need health insurance. But here's the kicker. EY isn't using this tool to help auditors. It's using it to reduce the number of auditors it needs. In 2023 alone, EY cut 3,000 jobs in its U.S. consulting division. PwC announced 1,800 layoffs. KPMG eliminated entire teams. These aren't underperformers being let go. These are qualified experienced professionals whose jobs were automated out of existence. And if the Big Four, the gold standard of accounting, are doing this, what do you think small and mid-sized firms are doing? They're not even automating gracefully. They're just not hiring. A recent survey found that 43% of accounting firms are leaving positions unfilled, not because they can't find talent, but because they don't need to. The AI tools they've adopted do the work of 2 or 3 people for a fraction of the cost. So here's the uncomfortable question. If your job follows a pattern, AI can replicate it faster, cheaper, and endlessly. And accounting, by its very nature, is a profession built on patterns. Double-entry bookkeeping, pattern. Tax preparation, pattern. Financial statement preparation, pattern. Variance analysis, pattern. Audit procedures, pattern. Even the judgment calls accountants pride themselves on are often just pattern recognition dressed up as expertise. You look at historical data, compare it to industry benchmarks, apply regulatory rules, and make a recommendation. That's not magic. That's an algorithm waiting to happen, and it's already happening. But here's where it gets personal. Think about your last month at work. How much of your time was spent doing something truly original? Something that required creativity, deep human insight, or emotional intelligence? Now think about how much of your time was spent doing tasks you've done 100 times before. Tasks you could teach someone in a few days. Tasks that, if you're honest, feel more like obligation than innovation. That's the part that's dying. If that's most of your job, then your job is dying too. But not everyone is being replaced. There's a new breed of accountant emerging, one that doesn't do the accounting, one that orchestrates it. They're called financial strategists, CFO advisors, AI-augmented analysts. They don't reconcile ledgers. They interpret what the AI found and translate it into business strategy. They don't prepare tax returns. They architect tax optimization plans that AI executes. They're not better at accounting than you. They're just better at using AI than you. And that's the gap that's widening every single day. Because while you were perfecting your Excel formulas, they were learning how to prompt an AI. While you were memorizing tax codes, they were building workflows that automate compliance. While you were defending your expertise, they were augmenting theirs. David Alter, an MIT economist who studies automation, said something that should be carved into every accountant's desk. The jobs that survive automation are not the ones that require the most skill. They're the ones that require the most adaptability. Let me say that again. It's not about how good you are at accounting, it's about how good you are at evolving. And right now, the profession is dividing into 2 groups: those who see AI as a threat to avoid, and those who see AI as a weapon to wield. Guess which group is thriving? Guess which group is getting promoted, starting their own firms, charging premium rates, and building the future of finance? It's not the ones clinging to the old playbook, it's the ones writing a new one. So here's the question that should haunt you tonight. What happens to those who refuse to adapt? Do they fade quietly, taking early retirement and wondering what went wrong? Do they retrain into something completely different, starting over at 40 or 50? Or do they become the human equivalent of a fax machine, technically still functional but completely irrelevant? Because that's the choice. Adapt or archive, evolve or evaporate. Transform or transfer to a dying industry that's just taking longer to admit it. And if you think I'm being dramatic, ask yourself this. When was the last time you met a switchboard operator, a typist, a travel agent who wasn't specialized in luxury experiences? They didn't see it coming either. They thought their expertise was irreplaceable until it was replaced. And the saddest part? They were good at their jobs. They were professionals. They were reliable. But reliability doesn't matter when efficiency becomes infinite. Welcome to part 2. The pattern is revealed. The question is, will you break it or will it break you? There's a gravestone in England that nobody visits anymore. It doesn't mark a person. It marks a profession. In 1589, a man named William Lee invented the knitting machine. He was so proud of it that he traveled to London to show Queen Elizabeth I, expecting a royal patent and a fortune. Instead, she rejected him. Not because the machine didn't work, but because it worked too well. "Thou aimest high, Master Lee," she told him. "Consider thou what the invention could do to my poor subjects. It would assuredly bring to them ruin by depriving them of employment." The Queen was protecting hand knitters, people whose entire livelihood depended on the slow, manual craft of creating fabric. She thought she was being compassionate. She thought she was preventing catastrophe. But here's what happened next. William Lee died poor and forgotten, but his machine didn't. Within a century, the knitting machine had spread across Europe. Hand knitters were replaced. Thousands lost their jobs. Communities collapsed. It was a tragedy. And then something extraordinary happened. The cost of clothing plummeted. People who could once afford only 1 or 2 garments suddenly had wardrobes. The textile industry exploded. New jobs emerged: machine operators, pattern designers, fabric distributors, fashion merchants. The economy didn't collapse. It transformed, and within 2 generations, nobody remembered the hand knitters. Not because they didn't matter, but because the world had moved so far forward that their struggle became a footnote in the story of progress. This is the pattern of every technological revolution in human history: disruption, despair, reinvention, renaissance. It happened with the printing press, which destroyed the scribes but created publishers, authors, and an explosion of literacy. It happened with electricity, which killed the lamplighters but birthed an entire energy economy. It happened with the automobile, which devastated blacksmiths and stable owners but created mechanics, highway engineers, and the interstate commerce system. It happened with the internet, which obliterated travel agents and video rental stores but gave us e-commerce, social media, and the gig economy. And it's happening now with AI. The question isn't whether accounting will transform. The question is, will you transform with it, or will you be the hand knitter clinging to a craft the world no longer needs? Because here's the uncomfortable truth about transformation. It doesn't wait for permission. It doesn't pause for those who aren't ready. It doesn't offer a grace period while you figure things out. It simply happens. And the only choice you have is whether to ride the wave or drown beneath it. But here's the hope, the real, tangible, life-changing hope. Every machine replaces a task, but never a dream. AI can process a tax return, but it can't dream of building a business from nothing. AI can audit a balance sheet, but it can't dream of financial freedom for a struggling family. AI can forecast cash flow, but it can't dream of the legacy a founder wants to leave behind. And that's where the new accountant lives. Not in the spreadsheets, not in the reconciliations, not in the compliance forms, but in the space between the numbers and the human story they tell. Let me introduce you to someone who figured this out before most people even saw it coming. Her name is Rita Kochevska, and in 2019 she was a traditional accountant in a mid-sized firm in Toronto. She did what accountants do: prepared statements, filed taxes, reconciled accounts. Then she watched her firm adopt AI tools. She watched her workload shrink. She watched her colleagues panic. And instead of panicking with them, she did something radical. She learned how to use the AI better than anyone else in the office. Not just use it, leverage it. She automated every repetitive task in her workflow. She let AI handle data entry, reconciliation, and basic compliance. And then she did something her colleagues weren't doing. She started asking different questions. Instead of, "Is this tax return accurate?" she asked, "How can we restructure this client's business to reduce tax liability by 30%? Instead of, "Are these expenses categorized correctly?" she asked, "What does this spending pattern tell us about inefficiencies in operations?" Instead of, "Is the audit complete?" she asked, "What strategic insights can we extract from these anomalies?" She stopped being a processor and became a translator, someone who could take the raw output of AI and turn it into human-readable, actionable, business-changing strategy. Within 2 years, she left the firm and started her own practice. She doesn't call herself an accountant. She calls herself a financial architect. She doesn't charge by the hour. She charges by the transformation, and she makes more money now than she ever did grinding through tax season, because she understood something most accountants miss. AI doesn't kill jobs, it kills tasks, and when the tasks die, new jobs are born. Think about it. When email replaced postal mail, we didn't stop communicating. We communicated more, and new jobs emerged. Email marketers, CRM specialists, automation engineers. When GPS replaced paper maps, we didn't stop navigating. We navigated better, and new jobs emerged. App developers, logistics optimizers, delivery route analysts. When AI replaces manual accounting, we won't stop needing financial insight. We'll need it faster, deeper, and more personalized than ever before. And the people who can deliver that, the ones who combine AI efficiency with human wisdom, will be indispensable. But here's the catch. You have to be willing to let go of the old identity. You have to stop saying, "I'm an accountant who does tax preparation," and start saying, "I'm a financial strategist who uses AI to optimize business outcomes." You have to stop defending tasks and start creating value. You have to stop being the person who does the work and become the person who orchestrates the outcome. And I know that sounds abstract. I know it sounds like consultant speak. So let me make it concrete. Here are the skills that will matter in the next 5 years for accountants. 1. AI fluency, not coding, but knowing how to prompt, train, and audit AI systems. 2. Strategic advisory, translating numbers into business decisions, not just reporting them. 3. Client relationship architecture, building trust and understanding that machines can't replicate. 4. Niche specialization, becoming the go-to expert in a specific industry or problem, not a generalist. 5. Storytelling with data, presenting insights in a way that inspires action, not just compliance. Notice what's missing from that list? Technical accounting skills, not because they don't matter, but because they're now table stakes, not differentiators. Knowing how to prepare a financial statement is like knowing how to type. It's necessary, but it's not what gets you hired or promoted or remembered. What gets you remembered is being the person who saw something in the numbers that nobody else did. What gets you promoted is being the person who turned financial data into a business breakthrough. What gets you hired is being the person who makes clients feel understood, not just invoiced. And here's the beautiful irony. AI is making that easier, not harder. Because when the machine handles the grunt work, you finally have time to do the work that matters. You have time to think. You have time to connect. You have time to create. And that's not a threat. That's a gift. But only if you're willing to receive it. Only if you're willing to stop mourning the old job and start building the new one. Only if you're willing to see this moment not as an ending, but as an awakening. Because here's what history teaches us. The people who thrive during transformation aren't the ones with the most expertise in the old system. They're the ones with the most curiosity about the new one. They're the ones who ask, What can I build that didn't exist before? They're the ones who see a knitting machine and think, how can I use this to create something the hand knitters never imagined? And right now, in accounting, that opportunity is everywhere. AI has handed you a blank canvas and unlimited paint. The question is, will you paint a masterpiece, or will you sit there complaining that brushes used to be made differently? Every machine replaces a task, but never a dream. And if you still have a dream, if you still have a reason you became an accountant beyond just the paycheck, then you're not obsolete. You're just at the beginning of the most important chapter of your career. The chapter where you stop being a cog in someone else's machine and start being the architect of your own future. Welcome to Part 3. The transformation isn't coming. It's here, and it's yours to claim. Let's talk about survival. Not the dramatic, apocalyptic kind. Not bunkers and canned food and hiding from killer robots. I'm talking about professional survival. Career survival. The kind that determines whether you're leading meetings in 5 years or sitting in them, silently wondering when your position will be restructured. Because here's the truth nobody wants to admit. Survival in the age of AI isn't about competing with the machine. It's about becoming incompatible with replacement. And that requires a playbook, a specific actionable strategy that you can start implementing today, not someday when you have time or when things get really bad. Because by the time things get really bad, it's already too late. So here's your playbook. 5 moves, 5 transformations. 5 decisions that separate the accountants who become obsolete from the ones who become invaluable. Move 1. Become AI fluent, not AI resistant. Let me tell you about 2 accountants at the same firm. Sarah heard the company was implementing AI-powered audit software. Her first thought was, great, more technology I have to learn. She went to the training session, clicked through the slides, nodded politely, and then went back to doing things the way she always had. She used the AI tool only when forced to, treating it like an annoying intern she had to supervise. Marcus heard the same announcement and thought, this is either going to replace me or multiply me. I need to figure out which. He didn't just attend the training, he scheduled one-on-one time with the vendor. He experimented with the tool outside work hours. He watched YouTube tutorials. He joined online communities discussing the software. Within 6 weeks, he knew that tool better than anyone in the office. And then he did something brilliant. He started documenting use cases. He created templates. He built workflows that combined AI efficiency with human oversight. He became the translator between the technology and the team. Within a year, Sarah was laid off. Marcus was promoted to Director of Digital Finance Operations, a role that didn't exist before, but was created specifically for him because he made himself indispensable in a new way. Here's the lesson. You don't need to become a programmer. You need to become fluent in how AI thinks, what it does well, and where it fails. You need to know which tasks to delegate to AI and which to keep human, how to audit AI outputs for accuracy and bias, how to prompt AI tools to get better results faster, which AI platforms serve your niche best. This isn't optional anymore. This is the new literacy. And just like you once had to learn Excel to be taken seriously, you now have to learn AI interaction to stay relevant. Action step. Pick one AI tool related to your work, ChatGPT, Copilot, QuickBooks AI, Xero, whatever, and spend 30 minutes a day for the next 2 weeks mastering it. Not dabbling. Mastering. Move 2. Specialize ruthlessly. Here's a brutal truth. Generalist accountants are dying first. Because if you do general accounting, AI can do it too. Faster, cheaper, and without asking for vacation days. But if you're the accountant who specializes in nonprofit compliance in the healthcare sector, suddenly you're rare, you're niche, you're hard to replace because your knowledge isn't just technical, it's contextual, industry-specific, relationship-based. AI can learn tax law, but it can't walk into a hospital CFO's office and understand the political dynamics between departments, the unspoken concerns about a merger, or the cultural nuances of how decisions actually get made. That's domain expertise, and it's the fortress that keeps you safe from automation. Let me give you another example. Tom was a mid-level accountant doing general bookkeeping for small businesses. When AI tools started automating his workflow, his client base began shrinking. Businesses realized they could get the same service from software for a tenth of the cost. Tom panicked, but then he pivoted. He had always been interested in real estate, so he went all in. He studied real estate accounting, learned about 1031 exchanges, cost segregation studies, opportunity zones. He networked with real estate investors. He became the accountant for real estate syndicators in his region. Now he doesn't compete on price. He competes on irreplaceable expertise. And he charges 3 times what he used to because he's not selling bookkeeping. He's selling specialized knowledge that could make or cost his clients hundreds of thousands of dollars. The principle: when you go narrow, you go deep. And depth creates defensibility. Action step: identify one industry, one client type, or one financial problem you're genuinely interested in. Spend the next 90 days becoming the most knowledgeable person in your network on that topic. Move 3. Shift from reporting to advisory. Here's a question that should wake you up at night. When was the last time a client called you for advice? Not just a tax return. If your relationship with clients is transactional, they send you documents, you send back forms, you're in the danger zone. Because that's exactly the kind of relationship AI can handle. But if your relationship is transformational, they come to you with problems, fears, dreams, and you help them make sense of their financial lives. Then you're building something AI can't touch. This requires a mindset shift. Stop thinking of yourself as a preparer of financial documents. Start thinking of yourself as a guide through financial complexity. Let me show you what this looks like in practice. Old model. Client sends you receipts. You categorize them, reconcile the books, send a P&L statement. Client says thanks and disappears until next quarter. New model. You review the AI-generated reconciliation in 10 minutes. Then you spend 50 minutes analyzing trends, identifying inefficiencies, and preparing a strategic memo that says, your revenue is up 12%, but your profit margin dropped 3%. Here's why. You're spending 18% more on customer acquisition than last year, but retention is down. I recommend we restructure your pricing model and implement a loyalty program. I've outlined 3 options below. See the difference? One is a task, the other is insight. One can be automated, the other is invaluable. Action step. For your next 3 client deliverables, include a 1-page strategic insight memo. Don't wait for them to ask. Proactively interpret the numbers and suggest action. Move 4. Build your personal monopoly. This is the move most accountants never make, and it's the most powerful one. A personal monopoly means you are the only person who can do what you do, the way you do it, for the people you serve. Not because you have a secret formula, but because you've built a reputation, a methodology, and a story that's uniquely yours. Think about it. There are thousands of tax accountants, but there's only one who's known as the accountant who helps creative freelancers pay 0 taxes legally. There are thousands of CFOs, but there's only one who's known as the fractional CFO who turns dying SaaS companies profitable in 90 days. That specificity, that brand, is your moat. And here's the beauty. You build it by being public. Start writing. Start posting. Start sharing what you know. Not generic advice, not regurgitated tax tips, but your perspective on the financial problems you solve. Write about the mistakes you see clients make. Share case studies, anonymized, of course. Teach people what accountants never teach. The why behind the numbers, not just the what. Because when you become known for something specific, clients don't shop around, they seek you out. And when clients seek you out, you're no longer competing on price, you're selling transformation. Action step. Write one LinkedIn post per week for the next 12 weeks about a financial insight, mistake, or lesson from your work. Don't sell, just teach. Move 5. Build leverage, not just skills. Here's the final move, and it's the one that separates six-figure accountants from seven-figure ones. Stop trading time for money. Start building systems that multiply your impact. AI gives you leverage. Use it. Instead of doing 10 tax returns manually, build an AI-assisted process that lets you do 50 and charge the same per client. Instead of meeting with every client individually, create group advisory sessions or record video explanations of common questions. Instead of answering the same email 5 times a week, build a knowledge base or a chatbot that handles FAQs. This isn't about being lazy, it's about being strategic, because the accountants who thrive in the next decade won't be the hardest workers. They'll be the smartest scalers. They'll use AI to handle the repetitive, use humans to handle the relational, and use systems to handle the scalable. And they'll do it without burning out, without working 80-hour weeks, without sacrificing their lives to their careers. Action step. Identify the one task you do most often. This week, find or build a way to automate, delegate, or systematize it. The playbook summary. Move 1. Become AI fluent. Move 2. Specialize ruthlessly. Move 3. Shift from reporting to advisory. Move 4. Build your personal monopoly. Move 5. Build leverage, not just skills. This isn't theory. This is survival. This isn't someday. This is now. And the accountants who execute this playbook won't just survive the AI revolution, they'll dominate it. They'll be the ones hiring, not the ones getting hired. They'll be the ones setting prices, not the ones competing on them. They'll be the ones shaping the future of their profession, not mourning its past. Welcome to part 4. The playbook is written. The only question left is, will you follow it? There's a moment in every transformation where you realize you've been standing at a crossroads for longer than you thought. Not because you didn't see the signs, not because you didn't understand what was happening, but because choosing a direction means admitting the old path is gone, and that admission feels like loss, even when it's actually liberation. This is that moment. You've read the warning, you've seen the pattern, you've been handed the playbook. Now comes the hardest part, deciding who you're going to be on the other side of this. Because AI isn't waiting for your decision, it's already rewriting the rules while you're reading this sentence. It's already being implemented in firms, adopted by competitors, mastered by the people who will replace you or hire you, depending on what you do next. So let me make this as clear and as direct as I can. You have 3 choices, not metaphorically, not philosophically, literally 3 paths, and you're standing at the split right now, whether you realize it or not. Choice 1. Denial, the path of irrelevance. You can choose to believe this doesn't apply to you, that your clients are loyal, that your expertise is too specialized, that AI will never understand the nuances of your work, that regulation will slow everything down, that people will always prefer human accountants. You can choose to keep doing things the way you've always done them, attending the same conferences, using the same tools, offering the same services, and hoping the storm passes without touching you. And for a while, maybe a year, maybe two, you'll be fine. Your clients will stay, your income will remain stable, you'll feel vindicated, even a little smug, because the apocalypse everyone warned you about didn't happen overnight. But here's what will happen slowly, almost imperceptibly. Your junior staff will leave for firms that use AI. Your clients' children will hire AI-native accountants. Your pipeline will dry up because new businesses don't even think to look for traditional accountants anymore. They start with software. You'll find yourself working harder for less, competing on price because you can't compete on speed, justifying your value in every conversation because the assumption of necessity is gone. And one day, maybe 5 years from now, maybe 10, you'll look around and realize the profession you knew is a memory. And you're a relic in it. This is the path of denial, and it's the most common path because it's the easiest to start. It requires no change, no discomfort, no learning, no risk. It just requires you to close your eyes and hope the future forgets about you. Spoiler, it won't. Choice 2, adaptation, the path of survival. You can choose to adapt, to learn the tools, to build the skills, to follow the playbook and make yourself valuable in the new economy. You can become AI fluent, you can specialize, you can shift to advisory, you can build leverage. You can do everything I've outlined in this book, and it will work. You'll survive, you'll stay employed, you'll remain relevant. Your income might even grow. This is the path most people will take once they realize denial isn't working. And it's a good path, an honorable path, a smart path. But here's the thing about adaptation. It's reactive, not creative. When you adapt, you're responding to a world someone else designed. You're fitting yourself into a future someone else built. You're optimizing for survival in a game where the rules keep changing and you're always a step behind. And that's fine if survival is your goal. But is it? Is your dream really to be just competent enough not to get replaced? To be just valuable enough to keep your job? To be just relevant enough to stay in the conversation? Or did you become an accountant because you wanted to build something? To help people? To solve problems? To create value that mattered? If it's the latter, then adaptation isn't enough. You need the third choice. Choice 3. Reinvention, the path of leadership. You can choose to reinvent yourself entirely. Not as an accountant who uses AI, but as a financial architect who happens to have accounting expertise. Not as someone trying to keep up with change, but as someone creating it. This is the path of the people who will define the next era of the profession. The ones who won't just survive the transition, they'll lead it. They'll be the ones writing the books, hosting the conferences, starting the firms, training the next generation, and setting the standards for what financial services look like in an AI-powered world. And here's what that requires. 1. A new identity. Stop calling yourself an accountant. Start calling yourself whatever reflects the outcome you create, not the task you perform. Financial strategist, wealth architect, CFO partner, whatever resonates, because identity shapes behavior. And if you keep identifying as the person who does accounting, you'll keep doing accounting. And accounting is being automated. 2. A new business model. Stop charging by the hour or by the return. Start charging for transformation, for outcomes, for peace of mind, for the strategic value you create, not the time you spend creating it. Because when you charge for your time, you're a cost center. When you charge for results, you're an investment. 3. a new mindset. Stop thinking like an employee or even a service provider. Start thinking like an entrepreneur, even if you work for someone else. Ask yourself constantly, what can I build that didn't exist before? What problem can I solve that people don't even realize they have? How can I create so much value that price becomes irrelevant? Because the accountants who reinvent themselves aren't trying to be the best at what everyone else does. They're trying to be the only ones who do what they do. 4. A commitment to continuous transformation. Here's the uncomfortable truth. Reinvention isn't a one-time event. It's a lifestyle. Because AI won't stop evolving, client needs won't stop shifting. The market won't stop demanding more, faster, better. So the accountants who thrive long-term won't be the ones who reinvent themselves once. They'll be the ones who stay in a permanent state of becoming, always learning, always experimenting, always evolving faster than the world around them can automate what they do. This is the hardest path, but it's also the only path that leads to freedom, fulfillment, and a career you're genuinely excited about. So, which path will you choose? Let me be honest with you. I can't make this choice for you. I can give you information, perspective, strategies, warnings. But I can't give you courage. I can't give you urgency. I can't give you the fire that makes you put down this book and immediately start changing your life. That has to come from you. But I can tell you this. The choice you make in the next 30 days will determine the next 30 years of your career. Not the choice you intend to make, not the choice you agree with intellectually, the choice you act on. Because intention without action is just a sophisticated form of denial, and time is the one resource you can't automate, delegate, or buy back. Every day you wait is a day your competitors get ahead. Every week you delay is a week your skills become less relevant. Every month you postpone is a month your clients start looking elsewhere. And I know that sounds harsh. I know it sounds like pressure. But it's not pressure. It's reality, and reality doesn't care about your comfort zone. So let me ask you the only question that matters now. What are you going to do tomorrow? Not someday. Not when you have time. Not when things calm down or when you feel ready. Tomorrow. What's the one thing you're going to do tomorrow that proves you've chosen adaptation or reinvention over denial? Is it signing up for an AI training course? Scheduling a meeting with your most innovative client to ask what they wish you offered? Writing your first LinkedIn post sharing a financial insight? Researching a niche you could specialize in? Blocking 2 hours on your calendar to experiment with an AI tool? It doesn't have to be perfect. It doesn't have to be big. It just has to be real. Because every transformation starts with a single action that breaks the pattern of inaction. And once you take that first step, the second one becomes easier. Then the third. Then the momentum builds, and suddenly you're not just surviving the future, you're shaping it. The last thing I'll say. There's a scene I think about often. It's 1995, and a room full of newspaper executives is sitting in a meeting discussing this thing called the internet. Someone suggests they should start putting their content online, for free. The room erupts in laughter. Why would anyone read news on a computer screen when they can get a paper delivered to their door? We'd be giving away our product. The internet is a fad. Real journalism happens in print. They were smart people, experienced people, successful people, and they were completely, catastrophically wrong. Not because they lacked intelligence, but because they lacked imagination. They couldn't imagine a world where the thing that made them valuable, controlling the printing presses and distribution networks, would become irrelevant. They couldn't imagine that the future wouldn't just change their business model. It would erase it. And by the time they realized what was happening, it was too late. The digital native companies had already won. I'm telling you this because I don't want you to be those executives. I don't want you sitting in a conference room 5 years from now, watching your firm announce layoffs, wondering why you didn't see it coming. I don't want you to be the cautionary tale other accountants tell their kids. Don't be like them. They had all the warning signs and did nothing. You have something they didn't have, advance notice. You're reading this before the transformation is complete, before the window closes, before adaptation becomes impossible and reinvention becomes the only option left. You have time, but not much. So use it. Choose a path. Take a step. And whatever you do, don't let fear of the unknown keep you trapped in a present that's already disappearing. Because the future of accounting isn't something that's happening to you. It's something you get to create. And the accountants who realize that, who choose leadership over survival, reinvention over adaptation, action over paralysis, won't just survive the AI revolution. They'll be remembered as the ones who saw it coming and built something beautiful on the other side. This is your moment. This is your crossroads. This is your choice. What will you build with it?